when I see price doing this, I'm going to look for leading men or leading women candlesticks in the plot. The plot is this booger is going down to take those overnight lows out. Now, every one of these candlesticks in here is just like, just an extra in the cast. They're not even getting paid to be there. They're just happy to be a part of it. And that's what's being shown here with all these different kind of candlesticks. But what I'm looking for is I'm looking for the candlesticks that have the time in the plot to start pulling forth their best acting. They're going to bring out an Oscar-winning performance. Well, we're going to bring in time now. 9:50 to 10:10 macro. You're familiar with that if you've been watching anything I've been teaching. The market creates this return back into the first presented fair value gap. We anticipate this acting as a premium array. It should repel price or keep it from going in the upper half here. It just comes up, just breezes to the low of it, and then says, no, I'm not interested. No thanks. And then what does it create here? What's that? That's a SIBI. So now that is a leading man or a leading woman candlestick. It's going to be impactful. So now we want a supporting actor or candle to come up and show how great of a candlestick this is by it coming up to half of its range. See that? I know this analogy is, yeah, it just came to me, honestly. I don't have it written out. It literally sounds amazing for me. If I was listening to this, I would be very, very impressed. I know I got to throw these dad jokes in all the time. So here we have the consequent encroachment of the SIBI, and then we start to see the price diving lower again. But now, look closely. We're zoomed in. We have a little bit more data on the price action, and we have two relative equal lows. What makes them relative equal? The one to the right is slightly higher than the one to the left. So this is a strong candidate for a raid on that sell side algorithmically. That's how your eye is supposed to identify it, okay? It's less likely to see that immediate run. Like, for instance, say we were looking at this low and that low. This is not a relative equal low. It's not a high probability. It can eventually trade through it, but not without at least retracing back for an inefficiency above the low. In other words, something going back to the left, either an inefficiency or a short-term high. That's why I'm teaching you and have taught you for years to look for the low to have the slightly higher low to the right. If it looks like this, chances are it's going to have a deeper retracement. It wants an efficiency premium or it wants a buy side liquidity pull.